Claudia, 25 basis points is nailed on for tomorrow. My question is, what comes after that?
Right, that's the big question everybody's going to be asking Jay Powell tomorrow. I think he will reiterate the steady that he talked about last time and probably explain to everyone what that means. We should anticipate repeated interest rate increases from the Fed, but he is going to probably hedge the bets even more than he would have just weeks ago. I mean, we have a major geopolitical conflict, and that really scrambles the signals. But I do think they're going to affirm that the recovery is well on its way and the Fed can and should step back.
So obviously 25 basis points, Claudia, is basically baked in for this meeting. Do you think 50 basis points at any meetings going forward is entirely out of the question?
So the Fed is data driven and everything is always on the table, right? Every meeting is live. They react to events. I personally think that we have heard nothing from the Federal Reserve, and I don't think we see anything in the data that right now would point them towards a 50 basis point move. I do expect we'll see that in the statement tomorrow, that there are officials who would like to see that, but I just don't see it in the cards yet, but it could happen later this spring.
Dot plot summary of economic projections. Let's talk about where the terminal rate is, Claudia. Where do you think the Fed is going to be pointing us to? How high do rates need to go?
Right. So I am not a fan of the summary of economic projections, and in particular the dot plot. And frankly, tomorrow, the dot plot is not going to tell us the answer we want. What we want to know is what is the path to get to the end of the year. We are in March. December is a long way away. So I think it's going to complicate it tomorrow because we're all going to be guessing, like, how do you get there? And we don't know how we get there, but obviously we are going to see a end of year number that is considerably higher than their last projection.
Something else that is not necessarily considerably higher, but considerably tighter is financial conditions. Actually back at the levels around they were back in 2018, and we all know what was going on with the Federal Reserve back then, Claudia. How do you think that factors into the thinking as they start to lift off with financial conditions tighter here?
Right. Well, this is really important for the Federal Reserve. They have a big influence on short-term rates, but that is not the rate that most families and businesses invest at. They need the markets to get the signal from them. We are going to tighten, and markets are forward-looking. Like, they move on when they figure out what the Fed's up to, not when the Fed meets, right? So it's actually a big assist to the Fed because they need to cool, particularly in interest rate sensitive goods like used cars and homes. Like, we really do need to cool it off there. That's the lever the Fed has, but it has to have an assist from financial markets, and they look like they're getting it. That's good.
Yeah, we're finally starting to see rates moving higher. Let's talk about the balance sheet. Let's talk about the housing market. Let's talk about the mix. What are we going to get on the balance sheet? Because I haven't heard very much on this subject for a while. It's an area that I think the market is really confused on.
Yeah, I think Jay Powell is going to spend a lot more time on the balance sheet. It's really helpful that the rate increase is baked in the cake. He has explained why it's coming. They're not going to have to spend a lot of time on that. And people really want to understand the Fed's thinking on the balance sheet. They have struggled with the balance sheet. Fed officials do not like it. We don't know exactly how it affects the economy. So I think they want to get out of that business as quickly as they can, but without destabilizing market. So I think we're going to hear a lot more about the Fed's thinking so that we are all prepared and they can see some of the reaction from markets. Like, how are you all absorbing this? But I still think they're going to kind of signal we're not, like, it's not the next meeting and probably not the next one, right? Like, it's going to take some time, but because they are figuring it out. Balance sheet is hard.
Well, and obviously the Fed's balance sheet is bloated as it is, the fact that it's still actively buying securities, all of that has had a bearing on the bond market and where exactly rates are, Claudia. Talking of the bond market specifically, the flatter yield curve, yes, we aren't quite as flat as we were at one point last week, but still 29 basis points between 2- and 10-year treasuries. At what point does that become more concerning for the Fed?
Yeah, I think the slope of the yield curve has gotten really hard to unpack since the Federal Reserve has gotten into balance sheets. They had a huge balance sheet after the Great Recession. They are more of a player in bond markets than they have been in the past. And so I'm pretty wary of looking at the yield curve. But again, they want to get those borrowing rates out at the end of the curve down.
Claudia, let's just kind of think about where the Fed is going. I don't think any central bank ever is going to say, we need a recession. But does the Fed need a recession to calm inflation?
Absolutely not. What the Fed needs is for us to contain the pandemic globally, right? It is very disconcerting to know that China is shutting down major production centers. We absolutely got slammed by Delta and Omicron. Before Delta, month over month, inflation was stepping down. Russia has created havoc in energy, and we're going to see it in food markets. The Fed has no lever. Like, they would have to throw us into a very severe recession to bring down prices at the pump. Congress can do a lot more. The White House can, but like the inflation we're facing, a lot of it is still COVID related, and it is now Putin related. And those are ones where, I mean, never would they want to create a recession. And frankly, they did a soft landing after the Great Recession. That really had not been done before. Like, they did it, right?